Hello and welcome to the Data Explorer's daily video update. So today we're going to be looking at the US real estate sector. Obviously it's been a very busy week for the US and lots of announcements coming through, including the midterm election results. We've also had the Federal Reserve report that they will be purchasing $600 billion worth of Treasury securities. And finally, in line with our sector today, the commentary surrounding the government-owned Freddie Mac and their earnings released earlier this week. So what we've done is take a look at the entire sector and the sentiment in terms of securities lending. We're generally seeing, and what we're finding is quite a neutral sentiment from securities lending, slightly skewed to be positive, but overall quite neutral. So this sector can be quite divided between the residential and also commercial side as well. And I think we're getting quite contrasting views coming through in terms of behaviour of both these divisions. Residential obviously not doing so well at the moment, quite bearish with the suspension of the sale of foreclosed homes at the moment, whilst all sorts of investigations and so forth take place amidst this big foreclosure crisis. On the other side, we have the commercial division, which is not doing so bad, and actually it seems to have avoided the meltdown that many commentators actually predicted. So what I've done is chosen a few stocks that are seeing a lot of activity recently in terms of securities lending. The first I've chosen is CB Richard Ellis. It's appearing at the top of our positive sentiment lists. And what we've seen is short interest has actually been falling over the past year and is down from about 8% to 2% of total shares outstanding on loan, mimicking this on the long side of the market, not so increased in rate of change, but we do see an increase of institutional ownership up from about 60 million shares to 78 million over the past year. Second company I've chosen is Grubb & Ellis. It's appearing at the top of our negative sentiment list at the moment. Obviously also focuses on the commercial side, but a very small cap firm in comparison to Richard Ellis. Now they're announcing third quarter earnings next week, which I'm sure people will be looking out for. They actually downgraded their outlook for earnings earlier last month, and I think they are predicting a $3 million loss, gross loss, which was not expected. So short interest has been building over the past month and is up from about 6% to 8% of total shares outstanding on loan. Lendable quantity has been falling since August, down from about 7.3 million to now 6 million shares in total. Moving over, we looked at St. Joe, which came quite close underneath Grubb & Ellis under negative sentiment. They have quite a diversified portfolio, as do Richard Ellis. Richard Ellis definitely global, quite diversified. Sorry, just jumping back there. Which may have helped with their positive sentiment as they are global and very diversified, obviously. Coming back to St. Joe, they operate in the commercial division, but they do have a residential division too. And what they've seen is a build-up of negative sentiment recently. The shares have plummeted by about 20% over the past month, and short interest has risen by about from 18% to 25% in the same time. Although what we are seeing is some short covering over the past week, and the current figure actually now stands at about 23%. One key variable to note here is the utilization. We're seeing utilization at a high of about 75%. So what this means is 75% of the lendable supply is currently out on loan. Now, just to give you a quick idea of how to compare this against, or to give you an idea of how large this number is, the sector average of utilization is currently at about 16%, so this is way above sector averages. So finally, I've chosen to look at Simon Property Group. The reason I've chosen to look at this is it's not appearing in any of our top 10 negatives or positive sentiments, but it's a very large cap firm with about $30 billion worth of market cap. It's definitely a giant in the US real estate. Short interest has actually been falling, almost halved over the past year, down from 6% to about 2.7%. The share price has also been seeing happy days and is up and hit its milestone of about $100. Did hit its milestone of $100 earlier in the week. Lendable quantity, the long side of the market, not so positive on this stock at the moment. Maybe some lack of confidence as yet. But we've actually seen a fall of institutional ownership over the year. However, this has stabilised, and we're seeing over the third quarter, the institutional ownership has been holding at about 96 million shares in total. Thank you for listening. So to read up on this report and also view charts and any of our other reports, please go to www.dataexplorers.com/news. Thank you for listening and have a great day.